So today's a big lesson is not just about volume, but a combination between the price action and the volume. Doesn't matter how you call it, the smart money or smart money actually too. When you combine these two mainstream strategies, trade by volumes, trade by delta, and trade by the price action, it becomes smart money 2.0. This is something that you've never seen before. So I'm going to show you how I trade. You're going to see every trade that I took today live, and you will see the results, and you will see my trade performance. And I'm going to explain you some new concept for some of you that's called price cycles. This is a tremendous concept that help you to gain the real edge in trading. So you're going to learn about the unfinished actions right here on the charts. You're going to see how we're going to use limit orders by the big players and how I'm going to use the trend momentum, because there is a trend and there's a trend momentum. You will see the difference. And the main point today, if anything you're going to learn, it is how to combine both of the strategies, how the price moves and create a price cycles, and we trade with the volumes and take advantage of the price action and the understanding what's going on inside of each candle, because we understand the deeper reasons why the price is moving in a certain way. So what is the situation right now? We actually are going too far up. It makes sense to go and find support at least over on this level of the price. Man, that's what I'm gonna do. But the price is have another target. What target it is? This is the price target. So we're seeing the limit orders over here. They're still sitting there. That's the target. So if we go aggressively, we can go and shoot up to this level. But at the same time, the price is still may go and revisit this area over here. To make a decision, we need to observe the structure, the price structure, the candle structure right here. What we're seeing so far that we've got squeezed from the up 1, 2, 3 times. Now it looks like we're gonna go sell. Okay, I'm gonna go short. At least for a short while, we may revisit this area, or we even can go significantly deeper. Okay, DB down. If I'm wrong, the price is gonna prove me that I'm wrong. But right now we are making some kind of a tension right over here. This tension needs to be released. This tension needs to be released. And it's gonna shoot or significantly higher, or it's gonna go significantly lower. Okay, so this candle is actually, it doesn't mean yet that this candle will go and cover the previous high. If it will, then I'm gonna hit my stop loss. If it's not, because there's a bunch of tails right here sitting, a bunch of tails, we may grab some liquidity like we've done in this candle and go significantly lower. And then if we go significantly lower, we may fall down, according to this price structure, we may fall down into the region, this region. Okay, of course, we have a few places where we may hang up for a while. So the price, I need to reverse. Boom.
Order filled.
I'm reversing.
Target filled.
Here we go. Buy
Order
again.
filled.
So here we go. So now we have an open road to this level that I show it to you. This is the first target. That is the second target. I can put rectangle on the first target. This is the first target.
Stop filled.
And I can do my second target will be right here. Okay, so I've grabbed the stop. Why is that so? Because I need to give more room. I made a tight stop, and this tight stop may trigger more often than before. It's normal for this price to go and seek support or second proof or retest, whatever you call it, right here, and then go up. If it's gonna pass this point of tension, then we're gonna go significantly lower. Okay. So now it plays the breaker block. This is the breaker. Boom, baga boom. We're gonna cross this line. We may go actually deep inside up to the possibilities. We can go right into this tension place or a little bit above that. That's fine too. In this candle, we're seeing a lot of resistance. Even it was a green candle, but there was like a plenty of resistance. So that resistance proving themselves again in the red candles so far. That's what's going on. Okay, see, we're reaching this point. Yeah, I'm gonna go sell right now. But we may bounce from this location again up, but let's wait, give a little bit wiggle room for my stop. Here we go. We're going down, and we're going down significantly. That's what price likes to do. Price likes
Target filled.
to grab liquidity on
Order
the one
filled.
side, on this side, and then grab liquidity on another side. So that's a classic. That's a very classic. Here we go. We're seeking support right now. And what I'm expecting at the end of the day for Friday, sales. The people should close their positions. Right now is about 12 in Los Angeles. So it's about 3 p.m. in New York. 3 p.m.? Yeah, I think so. Oh, 11:54. It's like 12. So that means it's 3 p.m. in New York. And those guys sitting in New York now want to close their position. So
Target filled.
at the end of the Friday,
Order
I
filled.
do expect sale, sale, and sale. And there's a nice place to go. So this is the at least where the price supposed to shoot down. Okay, here we go. Now let make it larger so we're gonna see what's inside of the candles. What's going on? It's actually helpful information. So sometimes I need to factor in the structure, and sometimes I do need to factor in the volume
Target filled.
indicator. So
Order
it's
filled.
just falling. It's falling. Fantastic. That's what I expect. So there is a, let me make this screen smaller. Here we go. And now, boom, oops. This is the breaker. And now we still have insufficiency over here. Bunch of candles one way. Because we're
filled.
sitting on the 30 seconds and
Order filled.
I'm just chasing price right now because it's falling and I'm gonna, this is the direction to fall. Okay. Is that a really difficult to,
Target filled.
okay, where is my rectangle? So that's the, oh, I already put this target there. So if the price is gonna give me a better chance to enter, I will be glad to sell again. Let's see what's inside of the candle. Here we go, here we go, here we go. I love it so far. Okay. Love it so far. Okay, that's a cluster. We hit this cluster. Nice. We may feel insufficiency even up to over here. This disbalance or imbalance, whatever it is. Now we're building momentum to go up, but with this momentum, we'll see what's going on in our speed indicator. Speed is going down. Speed is going down. That's a Friday afternoon. So the red delta was shooting up here. Then it started to give up and we turn into the green. So we may go up a little bit. A little bit. Okay. So I need to make this candle smaller in the width. Okay. Slimmer, not smaller, slimmer. Here we go. Now let's see what's going on with the delta. The red delta was high here, but the greens were actually protesting and fighting here. That was a green fight. Now the greens took over and exhausted, I guess. Not yet. Let's see what's the price doing. So the price is gonna go back to in this level, maybe. So that is the equilibrium point. Some people say there's no equilibrium. There is equilibrium. This is the equilibrium point. That is a significant level, price level. That's a equilibrium point. And sometimes price may go and play on the both side of that equilibrium point in a magic way. I mean, like just like a magic way. Okay? If it's giving me a chance to sell, and this equilibrium point or line is a really, for many of you, it's a new concept. Okay, that's a fast break over this equilibrium line. We'll see, we're gonna hit this structure, and this structure is sitting right here, because there is a order block. The order block is the last candle. To be technically correct, that is the order block. Boom. I'm gonna go to sell short. I'm going into the short. Not yet, buddy. Not yet. So the price may enter into this resistance block even up to the middle of that block. Okay. But so far there's a fight going on. Somebody get exhausted. What we're seeing is that we're seeing the structure that should be really tough to enter into. This is the most dangerous one. Okay, you never know how it's gonna end up. Oops, I've just made sale. So this is expanding structure, most dangerous ever structure that you can see to trade. This is insufficiency. We fill up. If we're gonna go up, we're gonna just go and shoot higher than this level. Is that gonna happen? I don't know. I'm just telling you that this structure, this very structure, it's a reverse triangle, you can say. The sharp angle is right here. This is the most dangerous kind of the structure to trade, because you never know, will it shoot higher or lower. So far, my hope is that this equilibrium, that's what's going on right now. They let greens go, the buyers go up to this block, this order block, and now, boom, I can even add more contracts into that really easily. Yeah.
Target order filled.
Boom, too late, but anyway, we're gonna go down. Anyway, we're gonna go down. You will see all my trades on the screen. I will add it in a second. You will see all of this.
Stop filled.
Oh, too short. Buddy, I'm gonna sell it again.
Order filled.
So it was too short. You will see my stop grab. My stops were grabbed by the price because I made it tight, and it's on the purpose. That is on the purpose. So I may hit some stop losses more often than before, because usually you need to give like 40 ticks for the price to wiggle back and forth. It's just normal. But if I lose 40 ticks, it's like too much. So normally it should be like this. At least that. So because I don't want to lose too much.
Target filled.
Here we go. We're going
Order
to sell
filled.
again. So now this is like, I see so far a reversal pattern if we're going down. But see, this candle is really give me some emotions, by the way, because there's a tail, there's a tail, there's a tail. We may reverse on the way up. But that structure is itself is like high, lower high. Of course, it's 30 seconds, guys. It's like very miniature structure. And this is a structure, I call it a gooseneck. A gooseneck is not recommended to trade at all. The gooseneck is like, it's a time of uncertainty. And that's a classical gooseneck, even from this perspective. You see high, low, intermediate, unproven high, or it's actually become high. But to compare with this
Target filled.
range, we're like
Order
sitting in the
filled.
middle. We're like sitting in the middle of this range, right? This high and low. This is the middle. We're kind of making U-turn. Slowly making U-turn over here. Now you see there's a limit order sitting here. That's a level. Still level 1 data there. So they're moving it down.
Target filled.
They're expecting it going
Order
down.
filled.
So they attracting, this is a magnetic limit order that sitting there to show everybody, hey, I want to catch over here. But then when the price is going to go down, then they're probably going to remove it over here. So we're going to see it if the same size order, limit order for those big guys, what they're going to do with this. I can turn another indicator, by the way, to show historically what these guys were doing here in the last half an hour, or at least maybe 10, 15 minutes, what
Target filled.
they were doing.
Order filled.
So I'm entering with a 10 ticks in profit. It's a specifically 10 ticks. That is my goal. Boom. So the speed of tape saying, hey, give me more room, because those green guys start shooting up. And you see this POC? That's what is the resistance right here. This POC and that POC on that candle, the same exact level. I should turn on clusters, because that pretty well, there's some clusters sitting over here. And in order to melt this cluster, we need some energy. So we're gonna back up to this level, at least. Give me more room. Up to this level. but I'm not expecting the price gonna go over this high. Okay, so this is the equilibrium. That was a false break. We'll see how it's gonna play, by the way. That is an interesting situation. Will we seek support over here? Oh, we're already getting weak. Are we exhausted? No, not completely. Not completely. When I look at the numbers, I can see the bids were 0 and the ask were like 11. So there is some people luck over here in their trades. They expected to go up. This is a danger for them. So the price may come back. If those guys will push again, the price may come back into this region to unlock those sitting ducks who lock themselves, okay? Now, let's see what the price gonna do. Price may just ignore those guys. And then they're gonna end up with stop losses, margin calls. See, the price is actually coming back to this. That's exactly the reason why the price get into this level, to unlock those guys. Okay, now we're unlocking them. Boom, sellers stepping in. Sellers over here, fantastic. Exactly.
Order filled.
That's why the price get back into this level, to unlock those unfinished actions. And you can see clearly that those guys were sitting ducks, unfinished actions. Those were finished actions, by the way. Those were unfinished actions. You can see it by the numbers and the candles. That's why we're using volumes to see more data, to see more actual reasons to trade. We understand now what's happening inside of the candle. So it's a price action plus volume indicators, not the kind of like EMAs or any other oscillators that build based on mathematical formula that started with EMAs or EMAs. This is not mathematics. This is contracts that is being traded, and we can see what's inside of each candle. Lovely, lovely, lovely. My 2 contracts that I entered in. So this is the ticks. I think it's a ticks. Okay. I think this is now ticks. Okay. Those are ticks that I'm grabbing. Now I get to the 0. So we're going to go down anyway. I hope so. Although if we take a look at this structure, so far, the marker for us is that line. And this line, how far it goes? It goes to this range. Okay, if we're going to cross this line, we are going down, very doobie down. Now, again, we're building a point, a tension point. This is the tension point. So the price will react because it's getting like squeezed from the up and from the down. And now we're going to see release of that tension. We're going to release of that tension because there is some liquidity on the upper side of this line and on the downside of this line. We kind of already have this liquidity grabbed on this range, on this range. So there's a chance that we are more attracted to go down. We may just like shoot a little bit up and then go down to grab that liquidity and go and finish this, fill in this insufficiency in this 1, 2, 3, 4, 5 candles shooting up. That's what I'm expecting. But we'll see how the price is gonna play. It's easy to talk, and the price I wish the price can listen what I'm saying right now. But here is my hypothesis. So this is another level, I mean the point of equilibrium, we can say, because there's a tension. Here we go, there's a tension. Although it's not like a super duper equilibrium. But still, anyway, we're building the tension. So the price is just like, oh, I'm stuck. Those guys from up and those guys from down squeezing me. You see the candles become shorter and shorter. And now it's going to be a long candle. It's going to be shoot up one or another way. Of course, I have my preferences. But the price love to go in the wrong way first, and then to go in the right way second, to show intention. Sometimes it actually do build double trap. So far there's no trap yet. We'll see what's going on. There's another point of friction. This is the block. That is a resistance block, by the way. Let me place a rectangle. This is the resistance block. The last point of that block is the like this is the this is the last point of this block, is most dangerous. We hit that block on the way up, then we shoot straight through it, and now this block may actually play the support, or we can shoot straight through this block. So that's what's going on right now. The price is hesitating. Boom, we went up, but normally the price should actually hit up to the highest point over here to totally grab the liquidity from this line. But my expectation is that we're gonna grab some liquidity, equal high right now, and then we will go through this breaker block. That's a mirror block, whatever you call it, breaker, because the price was able to break this block and this movement. That's why it's called breaker. But we're probably gonna go shoot straight down, and we're gonna end up somewhere here. But to be correct, we have a chance to get right here. So that's why I'm still keeping my stop loss. And somebody gonna say, oh, why do you keep stop loss while prices released up? Are you crazy? I don't expect that the price is gonna, like, at the end of the day, make new high. That's a Friday. Okay. Because we already, you see this, this block, I put it like beforehand, and we hit this block, exactly that block area. Now you can say, okay, we just accumulate some energy to go even higher. Yeah, we can. This is another target. Okay. That's another target. I can take and grab and put my stop loss over here. And I expect that if we're gonna go, it's not actually what I want. I just did for demonstration. If we wanna go down, we will go down even after filling up these insufficiencies. That's what the price attracted to. So most people don't understand that imbalances, we need to trade imbalances only in a context. By itself, by themselves, FVG or imbalances, balances, disbalances, disbalances or imbalances, we need to play in a context. Okay, so what's price is doing right now? Just hesitating. So building the second equal high. Okay, let me see the price. Let me see what's going on inside of the candles. So the candles get shorter and shorter so far. But we still have a squeeze from the down up. We're gonna see in a minute. So we grab liquidity over here. That's why this candle was like shooting like very eagerly. But now we may go down before I enter into. Even that can be a short trade from here to here. Even if we're going up higher, yeah, we can trade like from here to here, from here to here, because that's the target for the price. This imbalance sitting here, this imbalance is a green imbalance. The buyers very proactive over here. Green delta, a lot of green delta, but there's a red delta builds in. Even we're seeing the green here, but the reds were still opposing here. So now the reds actually going to show themselves. They're showing themselves, and looks like for a while the sellers are taking over. You see this POC is lower and lower. So for me, it's a sign to enter into a short. But it can be a really short, kind of like short. Okay. So the price decide to go up. Yeah. We'll see if this resistance zone is a resistance zone. Okay. Boom, we're going down, we're going down. We're going down, down, down. And should I enter with another contract? No. I'm tempted to add another contract even right now. That'd be a good entrance for me. There's a tail. Oh, magnificent entrance. I have a temptation. This is the right direction. We'll see how it ends up. Okay, we hit this imbalance zone. Boom, shooting straight through it. Fine. That means we're going down. And that means if we hit this line and going lower than this line shows us a momentum. The momentum. Because we're trading in a momentum. On 30 seconds, that's a trading in momentum. Boom, I'm going down. I mean, down is a good for me. I mean, because now I'm like positive. 9, 7, 8 ticks down. You see how fast we go? Because that's a liquidity grab. And now you're observing the benefits of trading volume plus price action. Somebody can call it smart money. Somebody can call it market maker. Somebody can call it whatever it is. There's a different versions of everything, like price actions and so on. There's some price actions I can comprehend and I just like puke. It doesn't really compute with my brain, my puny little brain. Now, I'm teasing myself. But, you know, some price actions, what they call it price actions, I don't take it. There's so much math. So much. While it should be simpler and easier, like you see right now. So, what we've done, we're now seeking support on this line. We're going significantly lower. That's the good idea for me. Enter again after we grab this profit over here. I'm gonna go into the sale again. Boom. I'm shooting down. because that's the leg. We're going to complete this cycle. You see, guys, most people don't understand the cycles of the price action. And there's like obvious cycle that you see on the screen.
Target filled.
Boom, what I'm doing,
Order filled.
I'm going into that's my target, guys. Somewhere over here. I may go should I do lower? No. So I'm expecting that the price is gonna finish this cycle. Oops. It found the support for a while. The price is gonna finish this cycle. This is the beginning of the cycle. This will be the end of the cycle. You know, I wear a hat. And I call this pattern as a hat. The price go back where it started from, over here. A little bit, maybe not exactly, but a little bit higher, like over here.
Stop filled.
Oh. Boom. I was making good profits, by the way. Okay, so we're gonna seek support somewhere in this region. And we're gonna go down anyway. So I can just like, because see, I should make like my stop larger. So what's going on? We're looking what's going inside of the candles. What's going on inside of the candles? That tells us a story. Boom.
Order filled.
Bagaboom. We going down. I hope so. Although this is another gooseneck that I told you not to trade. This is the gooseneck. I like a short gooseneck. The structure is exactly like down, up, down, higher, down, not higher. We're gonna go down. It's gonna be a reversal pattern right here. I'm gonna add another contract because we are going to be down. Boom. Another. Yeah, another. Okay, here we go. We're going down. So the price is going down. It will complete the cycle, guys. If you took any lessons from today and thinking I'm just a rambling, oops, I need to be careful. If I'm just a rambling, there's nothing to learn over here. Oh no, guys. If you grab my story while I'm trading, if you grab first, I develop my story and I trade according to my story. Okay? The price may come back to this line to seek a support. Yeah. You see this limit order? We'll take a look and notice what these guys are doing. Now they move this limit order higher, and expectations the price go higher. Yeah, that's a little local price cycle that we may end up over here. So cycle started over here. This is the bottom. We may go back to this region that they just removed a limit order from and put it higher right here. Bad guys. So but this is the interesting line. We're gonna see if the price is gonna behave. I don't know why, but sometimes it's just like behave over this line. Like who is behind that? There's some kind of like a computer genius. Why they behave this about this line on the one side, and now it's like this line from left to right, higher, right, is respected. Guys, give me a break. Did you ever seen this? Many times, of course. And that's why I put this line. Now you're gonna say, hey, you just put this line. No, I put it when I was here. I put it like over here. Okay. Like if we're gonna cross it here, now the same line is respected. Like I'm really surprised how accurately it's respected. And I'm going into the profit. Yeah, should I add another contract? Absolutely, baby.
Order filled.
We're gonna add another contract. Boom. Is that a conservative or is that a aggressive entrance? No, it wasn't aggressive. We already one tail, one candle, second candle shooting down. That is the trend. Now you see what's happening with the volume and delta going up. This is the climax. This is the maximum. It was a resistance. Now the volume start going down. We went up. Divergence or what it is. So we get exhausted on the way up. The green delta get exhausted. Now it's building lower volume. And it is a predictor for what? For us shooting significantly lower. Boom. It sounds contradictory. But see, we need to read the volume indicators.
Connection locked.
I thought I'm gonna check my connection, internet connection, and I unplug myself accidentally. Boom, baga boom. What do you see now? On my way down, but here we go. So I need to close my position manually. Okay, flatten everything and cancel all orders. Boom. See the price, that is the gap. I wasn't connected during that time. But guys, did I predict that the price is gonna go into this region? That is the larger block. Yeah. Now the price is actually shoots down. And I would like to show you all my trades for today. I don't think that I'm gonna trade again. So, but I've got my profit here. My profit was sitting here. We may well go down to the second. That was a breaker, last breaker, but we're gonna go down. We're gonna go even lower than this. So let me add my trades on the screen so you can see all my losses and profits. This is all my trades. You can take a screenshot, you can take a calculator, and you can calculate. Let's switch to the dollar sign. Boom. The point what you see right here is that I was trading 10 ticks only by setup. 10 ticks. That was my ATM strategy. 10 ticks. That's what it means. 10 by 20. 20 is stop and 10 is 10 ticks profit. Let's generate a trading performance. Now this is my account and I'm gonna do it for what? I'm gonna do it for today, right? So you're gonna see my trades only for today generate. Boom. What we're gonna see over here, the percent profitable is 85%. This is today. How many trades I took? I took 27 trades, 5 long trades and 22 short trades, and 80% in the long and 86% in the short. Not too bad. Generate, boom, that's a January 24, 80%, January 25, no, it was 23rd, 24, January 24, generate, so January 24, it was 82%, let's change it to January 25, and 25, here generate. So on 25th I done 83%, and on 26 yeah, and on 26 it is today, right? Today on 26 generate, boom, I've done again 83%. So 82% or like above 80 is like a normal, and all of my trades you see right on the screen. Nothing to hide, Now I can evaluate my trading patterns and tell myself, okay, that was a good trade, it was a wrong entrance, or what you're seeing over here is two main strategies combined together: trading by volume, because we see what's inside of the candle, and trading by the price action. When you combine both of them, that is what I called my smart money 2.0. See, exactly. I mean, guys, look, we started here, we ended with the same price level, because price love to complete the cycles. Too much information for today. Even if you grab only one simple idea, that the price love to go back to the where it started from. Look, it started over here, came back, started over here, came back. By understanding those cycles, we can project the price started here, resistance came back. This simple tool was giving an edge to anybody who trading volumes. But most people who trade volumes, they saying, "Oh, I hate price actions," while those who actually making money by trading volumes, they do incorporate intuitively, sometimes, or based on the large experience, they incorporate price action. And we'll see you on the next live session.